How do Malaysia's second quarter gross domestic product GDP figures for 2024 illustrate the country's economic resilience and sectoral growth? What do these results reveal about Malaysia's strategic positioning and future economic prospects? I'm Muhammad Hamdan, and this is Money Matters. Welcome to your favorite channel, TV3, where you can also stream on Tonton. Now, today we have Malaysian Economic Association President Dr. Yah Kim Lang with me right here in the studio. Dr. Yah, thank you so much for taking the time to be with us on this episode of Money Matters.
Thank you.
Now, Dr. Yah, we know yesterday the second quarter GDP results came in at 5.9%. How do you think the figures reflect Malaysia's economic achievements, particularly in relation to forecasted growth and sectoral contributions?
Okay, what is interesting is that you see Malaysia's growth performance exceeding expectations for the first quarter, as well as importantly for the second quarter. And here we see second quarter strengthening further to 5.9%, which is also slightly better than the advanced estimate of 5.8%. So what it suggests here is that the growth momentum of the Malaysian economy continues to strengthen despite a moderately weak global economy. And I think what's important here is also that the quality of the growth, in the sense that it is supported by both domestic demand as well as, importantly, external demand, which is recovering this year. So if you look at all the components from the supply side, like for example, manufacturing, agriculture, construction, services, supply side, and as well as on the demand side, all the components have exceeded expectations and also, importantly, better than the first quarter. So it is a fairly even growth across all sectors. And then importantly, the twin engines of growth for the domestic economy as well as for the external economy, both are so-called what we call firing at the same time. And so when both growth engines are firing at the same time, you see that growth for Malaysia typically will exceed 5%, you see. So we are looking at Malaysia's growth beating expectations for this year of 4 to 5%. And you are likely looking forward and at the higher end of the 4 to 5%, with some hope that the second half, if you can maintain this momentum, you will likely exceed 5% for this year.
Right. So you mentioned earlier that, globally, generally, global economy is considered weak at this point in time. And Malaysia is doing well on top of it, despite of that. Are we doing exceptionally well compared to our peers in the ASEAN region specifically, or is this not just unique to Malaysia? What's the situation?
Yes. Malaysia will be one of the top performing economies in Southeast Asia among the ASEAN countries. And also because Malaysian economy is highly diversified, so we will be able to capitalize on the sustained global demand. You see. What we see here is that although the global economy has been impacted by higher interest rates in the US and also the two wars that are happening now, and also the other aspect of financial market volatility hitting the global economy, all these so-called headwinds that we are facing now has not really impeded Malaysia's growth. And what it suggests is that Malaysia's both the financial sector and the real sector are able to overcome some of the headwinds that we are seeing in the global economy. The worrying signs of the global economy is that it is now experiencing one of the periods where debt is almost the highest. And also interest rates, especially in the US, is almost at historical high. And during this transition period, it's very important to recognize that there will be increased financial market volatility. And we have to shield ourselves from this kind of volatile capital and financial flows in the global economy. And importantly, maintain a strong and healthy financial system within the country so that it can support the growth momentum that we are seeing in the Malaysian economy, which is currently driven a lot supported by a very robust consumption growth. And then importantly, what we are seeing here, which is a very positive sign, is that private investment is now growing at a double-digit pace, you see. And it is a very positive signal for the economy, largely because you need investment in order to expand your production capacity so that your potential growth will be higher in the coming years.
Doctor, I also want to go back to what you said earlier about, all the key areas in the second quarter GDP results mostly exceeded expectations, right? So what are some of the main drivers that drove this strong performance?
Okay, we on the supply side, you will see that our two leading sectors are services and economy, and services and manufacturing. So manufacturing, we see that it has outperformed over the first quarter. In fact, the second quarter growth was about 4%, which almost doubled the first quarter. So this is a very positive indicator that the manufacturing output will be sustained, largely because of the pickup in exports and also support from the domestic economy. Now, on the services side, services is largely driven by domestic demand. So that indicates that domestic consumption continues to be robust, and it has hit 5.9%, close to 6%, which is about the trend growth for consumption. And
which is also reflective of a promising labour market in Malaysia.
Yes, it's also reflective of the labour market, stable labour market condition, but importantly, consumption has to be driven not by debt, but by income growth, as well as, of course, employment and other factors like wage increases and all that. So the key here is that although all are expanding, we need to ensure that they are driven by productivity growth. So we need to inculcate this focus on so-called laser-like focus on raising efficiency and productivity across all sectors, especially on the supply side, where we need to continue to expand the output capacity, continue to ensure that our supply chains are not disrupted. Then only we can win the battle over inflation. Because inflation, in the long run, can only be tackled by rising productivity and rising production, so that you do not face any shortages or any constraints in supply that will cause prices to rise. So over the longer term, the good sign here is that all the sectors are expanding, and hopefully they will achieve their sustainable growth level, whereby output continues to grow in line with the demand.
Okay. Now, Doctor, we want to look at economic momentum indicators, but hold that thought for now because we're going to go for a quick commercial break. So don't go away because Money Matters will be right back shortly. Welcome back to Money Matters. We're speaking with Malaysian Economic Association President Dr. Yah Kim Leng. Now, Dr. Yah, let's look at some of the economic momentum indicators. How did the actual Index of Services and Industrial Production data reinforce Malaysia's economic strength and momentum, particularly in the second quarter?
The momentum indicators like the Industrial Production Index, they basically indicate the level and the pace of activities in terms of production and all that. And very important is that the first quarter, the Industrial Production Index expanded at 3.3%. And then importantly, it actually rose by 4.5% in the second quarter. So we are...
This is production you're talking about. Okay.
Industrial Production Index. But bearing in mind that in the second half of last year, our Industrial Production Index actually contracted.
Okay.
by negative 0.3%. So we are actually recovering from a contraction in the second half of last year.
Are we normalizing though? Are we exceeding?
I think 4.5% will be the normal level.
Okay.
So going forward, the second half, we are expecting that level to be maintained.
To grow further.
Yes,
Okay.
to around 4-5%. And that's important because that indicates the industrial output of the country. The other one, on the services side, we are also seeing the same momentum being created in the second quarter. For example, the wholesale and retail trade sector, it grew at 3.7% in the first quarter. And the second quarter, it jumped up to 4.9%. And then overall services is close to 6%. So it's actually fairly in line with the GDP indicators that the momentum is also rising for these specific momentum indicators. But one point to note here is that there's when we compare quarter to quarter, that means the growth momentum, there appears to be some moderating. It is not a slowdown. It's just that it is growing at a slower pace. That means it's moderating, not a slowdown, because slowdown will have a sharp dip.
Right.
So that slowdown is perhaps indicative like that external environment is also getting more adverse, and then domestic demand, we are actually hovering at the so-called at the top end of the growth spectrum. So
that's a good thing, isn't it?
Yes, okay. That's fine because you are producing at your potential. As long as you're producing at your potential, then you are fully maximizing all your resources. And what's important here is that it can be, it is sustainable. As long as there's no other shocks hitting the economy, then that momentum of industrial output will rise in order to meet the expected demand.
Doctor, how have the Sumbangan Tunai Rahmah SER cash transfer, EPF flexible account withdrawal positively impacted consumer spending and GDP growth?
Yeah, I think this issue on people's welfare is very much in the front burner, in the front burner of government policy making. Because in most policy discussion, the welfare of the people is actually has been in the front burner, so-called. And all these welfare programs, they are very important in terms of ensuring that the marginalized group, the low-income groups, they are not impacted by rising cost of living. So that's why all these Sumbangan Tunai Rahmah and all the different EPF withdrawals, they are reflective of the need for stronger income in order to supplement their reduce the impact of the rising cost of living. So I think that focus is we have to strengthen it by not just providing subsidies, aids, and welfare programs, but importantly the upskilling and reskilling, so that we can raise their income levels. And this is where I think the other complementary strategy mounted by the Ministry of Economy is that they are looking into progressive wages. But these are for the formal sectors. So in order for wages to rise across the entire economy, we have to ensure that the growth is supported by equality in terms of income distribution. So we need to raise wages, but it has to be accompanied by productivity increases and also increased contribution employees to their businesses, and then importantly, for employees to recognize the contribution of the employees and then to reward them with the appropriate bonuses and increments, so that it is more sustainable. Because the entire growth sustainability of the economy is actually to ensure that despite the good growth, we need to ensure that no one is left behind by ensuring that the opportunities are there, the income support is there, and the various welfare programs are in place to ensure that overall consumption can be sustained, because they comprise a large part of the consumption as well. So for the economy to grow sustainably at a high level, we need also to uplift the lower income groups, and the best way is it's important to equip them with the necessary skills and also income generation opportunities.
Okay. Doctor, let's talk about trade balance analysis. What does the favorable trade balance data for the second quarter indicate about Malaysia's trade dynamics and economic resilience, especially with increased imports and strong exports?
Yeah, I think last year, if you notice, our trade performance was almost like flat, see, almost flat to slightly negative, minus 0.3. But this year, second quarter, we already hit 8%, you see. 8% growth. And we do note that trade performance is highly volatile. So it's very much dependent on the state of the global economy, external demand, and the state of play of our trade partners. But what's important here is that Malaysia continues to chalk up its current account surplus since 1998. You see. So we have a very strong record of maintaining our current account surplus, which is also one of the key pillars of the strength of the economy, having a single deficit, fiscal deficit, but not current account deficit. So we are still able to generate sufficient foreign exchange earnings in order to pay for our imports, you see. And that's very important in terms of reflecting the health of the economy and as an open economy, you see, because if you have imbalances, you are not unable to generate enough foreign exchange to pay for your imports, then you're very vulnerable to shocks in the sense that if you run out of foreign reserves, then of course you'll be subject to speculative attacks and the loss of investors' confidence and all that. But we are not seeing that. We are seeing a slight improvement in our current account surpluses, which is basically reflective of our saving investment gap. So we have a higher savings compared to investment. So we do have a stable balance in that area of economic balances.
Okay. Now, Doctor, we want to look at trends in the labour market, because we mentioned earlier how we have a relatively strong labour market in Malaysia, which also resulted in higher consumption that we saw in the second quarter. But before we do that, we're going to go for another quick commercial break. So don't go away to our audience, because Money Matters will be back shortly. Thank you for staying with us. We're speaking with Malaysian Economic Association President, Dr. Yah Kim Lang. Dr. Yah, let's look at some of the trends in the labour market. How do the latest unemployment figures and retail trade growth highlight positive trends in the labour market and also consumer confidence?
I think the bottom line is that Malaysia's labour market, we have actually achieved full employment.
Okay.
And of course,
technically full employment, right?
Technically full employment, because the natural rate is around
3%,
3.5 to 4%, depending on the economy. But for Malaysia, 3% would be 3% considered full employment. But importantly, we have also created jobs for more than 2 million foreign workers. You see, and it's something that should be recognized from a global perspective, creating jobs for foreigners. Okay. I think important for the labour market to continue to strengthen, to meet the needs of the industries, especially the emerging industries, and the fact that we are transforming from a conventional economy to what we call a digital and green economy. You see? So the skill sets and the labour requirements are different from a conventional economy, driven largely by what we have seen in our traditional sectors. So we have to ensure that our skills training and supply of skilled workers are ready to meet the industry needs, especially when so much investments are going into those sectors that we have discussed about high-tech industries, high-tech services and all that. You see. So that's very important to ensure that there's no mismatch in terms of our labour market, whereby high skills we have, but there could be some mismatch in terms of their training versus the industry needs. And then, of course, at the lower end, we are short of workers for those jobs that are so considered 3D jobs, which are filled mainly by foreign workers. So there are two mismatches at the high-end, high skills end, and then also mismatch at the low skill ends.
Right. Okay, Doctor, looking at the second quarter GDP data again, what are the key positive economic developments highlighted by the the second quarter GDP results, and how might these shape Malaysia's future economic strategy going forward?
I think what's encouraging from the second quarter performance is that both services and the manufacturing sector have recovered their strength. And importantly, for the manufacturing side, we are seeing rising industries that are so-called in the advanced stage of development, the so-called advanced technology industries. We are seeing a lot of robust activities in those areas. So that would suggest that the demand for skilled workers will continue to rise, you see. And that's important in terms of the structural upgrading and moving towards what they call the digital and the green economy, you see. So a lot of our jobs now are highly specialized. They require advanced knowledge, they require advanced training and all that. And then, of course, we are seeing UNICEF responding to those needs. So it's a gradual process. Of course, there's no overnight success.
Sure.
We have to move gradually and then seeing the opportunities that have opened up. Then, of course, for the government, it's basically to disseminate all this information to the private sector, and hopefully they will respond in line with the opening of the opportunities.
Doctor, looking at the favorable economic growth that we're seeing so far in Malaysia, we must also say that this is reflective of the political stability that we have in Malaysia, right? So in terms of policy recommendations, based on the strong GDP figures, what specific policy measures or investment strategies do you think should be prioritized to build on Malaysia's current economic success?
Yeah, I think it's important to also recognize that political stability is a major requirement for businesses to try for economy to remain stable and continue to prosper. So once we have political stability, the next one will be in terms of policy direction. So of course now we have all the various blueprints and plans. The key challenge now is the implementation. So I think and evidence of the implementation success is, of course, the GDP growth. And what we are seeing here is that second quarter has exceeded expectation, and it partly reflects that investment is rising according to the envisaged plans that the government has put up. But I think
investor confidence is back.
The confidence part of it, as you rightly pointed out, sentiments, confidence, they matter a lot. And what we hope for is that there's rising foreign investor confidence. And what is needed here is that our local investors have to be confident in the economy and their outlook, in line with the opportunities that will open up because of rising foreign investments. There'll be a lot of supply chains opportunities that will open up when large foreign companies invest in the country. So there will be abundant opportunities for SMEs to capitalize on this kind of supply chain or what you call network trade that we see that will open up with increased foreign investments and a creation of new global supply chains led by all these major multinationals.
Doctor, I also feel like businesses and policymakers, they should walk side by side, and how do you think businesses and policymakers should leverage the positive GDP, second quarter GDP results to enhance strategic planning and capitalize on emerging growth opportunities?
I think now that there's increased confidence in the direction of the economy, so basically it means that current operating environment is conducive for further expansion. So I think both sides, they have to adopt a more collaborative stance, especially in terms of policies that require a bit of sacrifice, a bit of short-term pain versus long-term gain.
Right.
Those are the difficult policies that government has tried to implement, but we need greater uptake from the private sector in terms of, like, for example, digitalization. they need to invest more on technology, more on R&D. So they have to rise to the challenge of putting their money where it will work, not in the short term, but in the long term, because R&D may have a long gestation period. So convincing that is very, very critical, I think.
Dr. Yakim Lang, President of Malaysian Economic Association, thank you once again for taking the time to be with us on this episode of Money Matters. We really appreciate your insights and your presence here.
Thank you for having me here.
Thank you. Now, for the past half an hour, you've been with us on Money Matters. If you missed the earlier part of this episode, you can also catch it up on Tonton. I'm Muhammad Ahmad Hamdan. Thank you for watching and have a great weekend.